Did you know a credit score and a credit rating are entirely two different things? In today's video, I'll explain to you the difference between credit score and a credit rating, the difference between a hard search and a soft search, and the ways to improve your credit score. Hi, my name is Gina and welcome to my channel. On my channel, I share lots of time-saving and money-saving tips for people like me living in the UK. Recently, in one of my Facebook groups, I read the story about a lady who was applying for a mortgage, went through a mortgage broker, did not like the product she was offered, went to a bank, applied for a mortgage, got declined, reapplied again, got declined, and then decided to look at a credit score. And only if she'd started with her credit score first, she could have avoided 3 hard searches. So that's why I thought today I'll explain to you about credit score and credit rating. So credit score, as the name suggests, it's a score and it's a number, and only you can see this number. There's 3 different agencies where you can apply to see your credit score, and I'll tell you about how to get this for free in a minute. But a 415 with one agency could mean a poor score, whereas 415 on another agency could mean an excellent score. It's a very good idea to monitor your credit score with at least 2 agencies once a year. And the reason you need to do it with 2 different agencies is in case one agency has accidentally missed something out or there is some discrepancy. If you've done 2, then it's a good average. 2 of 3 is a good average. And it's advisable to do your credit score every year or before a big application like a mortgage or a remortgage or even a personal loan. A credit report is what the company that you applied for credit for, as in a mortgage. So the bank can see a credit report, they cannot see your credit score. The reason you need to monitor your credit score is if there's a drastic drop in your credit score, you then need to go to your credit report to see why that might be the case. So the credit score is only a score, whereas the credit report is a whole financial report. There's also a soft check on your credit report, and there is a hard search. A soft search is when you do an eligibility for a loan product, whereas a hard search is when you actually apply for the product. So a hard search remains on your credit report for 12 months. All of us know that if you apply for a loan or a credit card or a mortgage, it's shown on your credit report. But you may not always know that if you apply for a insurance, say a home insurance or car insurance, and choose to pay it over 12 months, you're actually having a credit with that company. So then they do a credit search. The same thing if you take a contract phone and pay it over 12 months, it's actually a contract with that company. So then it's on your credit report. Another thing that we all know is when we apply for a loan product, the company looks at the credit report, but they also look at the application form. So it's important to get all the details on that accurately. They also looked at your previous addresses. So it's important to get that down accurately. Also, they look at other previous history that you've had with that same bank. For example, if you apply for a mortgage through HSBC, they look at your current account that you've had with HSBC. They also look at other publicly available data like county court judgments and things like that. So here are some things that you can do to look after your credit score. First is always do a soft check before you apply for any loan product. Refusal on a soft search would not affect your credit report in any way. Another thing you can do is register to vote. Like I told you, the loan company often looks at the publicly available data, like the voting register. So even when I was on an Indian passport previously, because India is part of the Commonwealth, I was eligible to vote. So see if you're eligible to vote. Europeans and Commonwealth citizens are allowed to vote even though they're not a British citizen. The next thing you can do to protect your credit score is to pay your insurances annually. This not only protects your credit score, it also saves you money because there's often a little added interest to paying it over 12 months rather than paying a lump sum annually. The next thing you can do is quite obvious, is never to miss a payment. Whether it is your mortgage or your loan or your credit card, never miss a payment. And I know we are all living through difficult times like we've never lived before. So if you've lost your job or going through redundancy, contact your loan provider and negotiate a plan with them. Do not just choose not to pay it. You will be hard hit that way. But if you explain your difficult circumstances to the loan provider, you may be able to negotiate a deal with them. Another thing that you can do is to cancel unused cards or accounts or telephone lines. When I first started monitoring my credit score, I noticed there was a very account that I closed many years ago, but the account was not fully closed. I just paid off the balance, but the account was not closed. So that was still showing as an available balance on my credit file. So look for any unused accounts on your credit report. Another thing that you can do is unlink people. So if you have an ex-partner or if you've divorced your partner and you're still linked financially, then unlink that person, because what they may do financially may affect your credit score as well. Another thing that you can do is control the frequency of applications. If your credit report shows multiple applications, the company may think that you're desperate for credit. So you may not be their favorite customer. So space out your credit applications. Actually, it's not even credit applications, utility bills or even bank accounts show on your credit report. So try and space that out and try not to have anything on your credit report at least 6 months prior to a big loan applications like a mortgage or a remortgage. If you rent your home and you always pay your rent in time, you can apply to pay your credit through Credit Ladder. I'll put a link through this website in the description box below. The only drawback is your landlord needs to approve for you to accept rent via the Credit Ladder. But this improves your credit rating. But also if you miss a rent, it can work in the opposite direction as well. So if you always pay your rent in time, consider paying your rent through the Credit Ladder. Another thing that affects your credit score is credit utilization. The companies do not like you to max out one credit card and not spend anything on the other credit cards. So it's good to keep it under 30% of credit utilization on every credit card. I do most of my spending on my Amex credit card just for the extra cash back. So if you are worried about credit utilization and do most of your spending on one card, you may want to pay it off twice a month rather than just once a month. So there is 3 different credit report agencies. The biggest is Experian. There is also Equifax, which is the second biggest. And the third is TransUnion. If you apply to each of these directly, you get a 30-day credit report. But you can get a free credit report for each of this. So for the Experian, you get it through the Money Saving Club, Martin Lewis's website. Or for the Equifax, you can get it through ClearScore. Or TransUnion, you can get it through Credit Karma. And you get it free through these secondary websites only because they try and sell you a product. So I hope you found this video useful and have taken away one tip to improve your credit score. If you've liked today's video, please give me the thumbs up like button and share this with a family or a friend who may be applying for credit. So if you've liked today's video, I do lots of money saving videos on my channel. So make sure to subscribe to my channel so you never miss a video again. Thank you for watching my video and stay safe. Bye-bye.